And thanks for staying with us here on the Market Day Report, brought to you by Ariat. Good morning once again. Well, there's a tax code that allows farmers to deduct expenses incurred for conserving soil and water. However, there are numerous rules that also apply, as well as the requirement to capitalize the expenses if they're not deducted. Well, Roger McEowen with the Washburn School of Law joins us now to review tax issues surrounding the treatment of soil and water conservation. As always, Roger, thank you very much for your time here this morning. So what are some of the deductible expenditures that might qualify?
Well, good to be with you, Janet. There are a number of expenses that would qualify for a farmer, various types of earth moving on farmland that's used in the business of farming, expenses for leveling, conditioning, grading, terracing, and contour farrowing would also be eligible, plus your costs of control and protection of diversion channels and drainage ditches and irrigation ditches and earthen dams and water courses and outlets and ponds, and even the cost of eradicating brush and the planting of windbreaks is eligible, and drainage district assessments would also be eligible if the assessments would have been deductible expenses if the taxpayer had paid them directly. So there's a whole host of things that can be deducted.
Now, what type of deductibility requirements do we need to keep in mind?
Well, the taxpayer has to be engaged in the business of farming, and the big catch on this one is that you can't be a cash rent landlord. A cash rent landlord, according to the I.R.S, is not a farmer. You're in a rental activity. So if you have a material participation lease, whether it's crops or livestock share, you're fine, but just don't cash rent.
And how does a farmer go about, of course, claiming these deductions?
Well, once you are in the business of farming and your expenses are pertaining to the land used in farming to produce crops or livestock, and they're consistent with an NRCS plan, then you can deduct the expenses on line 12 of the Schedule F. That's where you take that amount off. And if you don't claim them, as you indicated, you have to add them to your income tax basis in your land.
Now, Roger, can you give us some background on recapture and how that can play a role in all of this?
Yeah, recapture is the dirty word, so to speak, in tax. And if you take the deduction for soil and water conservation expenses on farm or ranch land, and then you dispose of that land within 10 years of its acquisition, part or all of the deductions have to be paid back to the government as ordinary income. Now, there's a computation you go through, and it's 100% recapture in the first 5 years, and then it's a sliding scale from years 5 to 10. But once you get beyond 10 years, you're clear of the potential for recapture.
So, Roger, what would you say is maybe the big takeaway that we need to keep in mind here?
Well, a couple of things. One is keep good records. Always keep good records of expenses, including your potential soil and water conservation expenses that could lead to a deduction. And if you have qualifying expenses, I think this is a really helpful tool to include in your tax planning arsenal.
Roger, how difficult is it to get started, and is it something that we need to work with our tax professionals to maybe begin?
Well, that's a good question. Whenever you are doing conservation practices on your property that are consistent, of course, with an NRCS plan, there may be another provision that's there, and that might be that there might be government cost share that can help you broker the cost of that. But for your other expenses that you're out of pocket on, make sure you keep track of those, because a tax professional can help you wade through what's deductible and what's not. So I would say, again, to go back to what I said, start with really good record keeping, make sure you keep a detailed log of what you're doing, and make sure you're not in a cash rent arrangement and that you may have some expenses in this area that would be deductible.
Roger, it sounds like it also might be a little bit handy to work with NRCS directly and work with them through their records and suggestions that they might have available too.
Yeah, that's a good point, because one of the key requirements under this code section is that the expenses have to be consistent with an NRCS approved plan. And I would say I would add on to that, if there isn't an NRCS approved plan, then you can also, the code says, a plan for the area, which would be a state or local plan. But you have to have some type of government plan for conservation on your farm to make the expenses deductible.
All right. Well, Roger, as always, thank you very much for your insight this morning. Roger McEowen, he's with the Washburn School of Law on the phone, or rather connecting with us over the internet here today. Again, Roger, thank you very much for your time. You can go online to washburnlaw.edu/WALTR for more information.